Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Monday, December 2014. Well, as I suspected, I've been mentioning for several days now, I thought that a market correction or a pullback would occur beginning today, and we did see that. So we'll see how far it takes us, and we'll see if we can get some follow-through on the downside. But we got a lot of stuff tonight, and there's a lot of interesting tells. And I want to go over them. So basically you had the S&P down about 14 points. The Dow wasn't down that much. It was down only 50 points, or basically less than 1/3%. And what you typically see when the reason for that is you see some money that will flow into the Dow-related stocks. Stuff like, let's just take a look, Altria. Altria was up a little bit today. You had stuff like Microsoft was up today. Let's take a look at Microsoft. What else was up today? Let's hit one more. I'm looking on my other chart here. Well, you had some of the integrated oils up, ExxonMobil, Chevron, Conoco, and we'll get to the oil sector and the energy sector a little bit later. So what happens is you see a flow into, it's called the flight to quality, and so that's not that abnormal. But the S&P put in a nice little sell today. The SPY was down. What was the SPY down? 144, which translates to 14 points in the S&P. But the real market that took a real hammering today was the transports, right? The transports were down 249 points, or 2.71%. And we can look at the IYT, which is the ETF that tracks the transports, and you'll see, look at that sell today. So the last trading day on Friday, you saw the transports go up, have a reversal day, okay, finished close to the low or on the low. Then you had follow through today, and we cut through the 20-period moving average and finished down here at this basically this breakout point here. So we'll see if we can get some follow through there. We should, but the market's not going to go down every day, and tomorrow is known as a turnaround Tuesday. So you may see down in the morning, and you may see a reversal, but we still should see more downside over the next 7, 8, 9 trading days, and we'll see how that plays out. One of the market tells that I always talk about, that I've been talking about the last few days, was the IWM. So the IWM put in about 1.5% down on Friday, and then it put in another 1.5% down today, roughly. So the Russell was down hard. The NASDAQ was down hard. The NASDAQ was down 1.33% or 1.33% or 64 points. And that's money running out of risk assets, right? So I indicated to you that last Friday when the IWM was down 1.5% or 1.5%, I said that was a good sign that we're going to start to see the pullback, and lo and behold, here it is. So we'll see if there's any follow through, but so far so good. And that's about it for the major markets. Let's go over to crude oil, and let's go to the USO. So crude oil, basically overnight, let me get you some numbers. Crude oil overnight hit, it was like 63, I don't remember exactly, 63.31, something like that. Anyway, and then it hit a reversal today, and it finished at right now it's trading at 68.55. And that's a pretty good reversal day, and that's one of the reasons why the big integrated oils were up. But there was still a lot in the energy sector that was down. And I figured, I didn't figure it out, I just finally something hit me today. And I've been watching another market indicator that I don't talk about that much, is the junk bond index. And here is JNK, if I can get the chart up here for you. All right. JNK. Okay. So JNK, and forget about the last 2 days, which was down pretty good, but JNK from the beginning of September, okay, first it made a lower high from back here. All right, and this is, again, a proxy for the junk bond index, high yield debt. All right, this is stuff that's non-rated, stuff that is rated very, very low, and basically has when the right circumstances or the wrong circumstances present themselves, this is stuff that the bonds in here have a propensity to default, and that's why they're high yield. They're junk bonds, okay? So what happened was you put in this higher low, and then you sold off, bounced back a little bit, and they typically will trade with the market, but I know I've told you this a couple of times, at least once or twice, and then and then basically started to melt away again, even while the market was going up. And that was an indicator that something was going on. And I know I mentioned that a couple times. And what I figured today is going on is in the energy sector, okay, when oil is as low as it is now, okay, let's say in the $60, $65 neighborhood, and we were down, at 63 and change earlier today or overnight. When oil gets that low, there's a lot of companies in the energy sector, MLPs, and what they're called midstream companies, exploration companies. What they've done is these are companies that explore for oil, and in order to do that, they take on a lot of debt. Okay, they sell a lot of debt to the market. They take that money and they invest it in the exploration process. Okay, and then if they hit it big, everybody gets paid back, and they hit it big, and everybody makes money. But if they don't hit it big, okay, who's going to repay that debt? Well, if they're not exploring for oil, or they explore and they don't find oil, either way, nobody gets repaid that debt, and that's why it's considered junk debt, because it has a high risk. So what happens is, when you look at some of this stuff, like I'm going to just bring up 2 or 3 of these. Lynn Energy is one. Okay, look at this thing. All right, just taken out behind the woodshed. All right, MEMP is another. I think it's a midstream company. Okay, this is Memorial Enterprise Partners, something like that. Okay, this thing went from in the 20s down to 13, so it's basically been cut in half for the most part. Okay. You have even RIG, which isn't necessarily a high yield company, but RIG has just been beaten down to a pulp. Okay, it goes from up here in the $40 neighborhood in August down to half, 20. All right, so what's happening is if these exploration companies can't explore for oil because the economics aren't there, meaning if oil prices are too low and it costs them too much to pull oil out of the ground, they can't operate. And what's happening is the junk bond index is telling me that some of these companies are going to fail come hell or high water. Now, that's not necessarily going to happen tomorrow, but if oil stays down and it goes down farther, even for a little while, some of these companies will begin to fail. The equity will get wiped out, and the debt holders will get wiped out, or get pennies on the dollar. And so now I understand why the junk bond index was telling us that something was wrong. And it could have been in any sector, but now it becomes obvious when oil really scaled down and price went really, really low compared to where it was up at $85 or $90 a barrel. Okay, they can make money hand over fist at those prices, but down at $60 and the prospect that it could go lower, okay, these companies begin to become real risky, and there's no way that they can borrow money. And what happens is this debt is normally shorter term debt. It's not 20 and 30-year bonds. They're 5-year, 7-year debt, 9-year debt, 3, 4-year debt, all kinds of stuff. And when that debt comes due, they have to roll over the debt because they're not going to be able to pay it back. And when they go to roll over that debt, okay, they're not going to be able to. And that's basically what's going to happen in my mind. And if you go back in time to in 2008, or 2007, when Bear Stearns failed, that was the shot across the bow. And then everything seemed fine for like 7 or 8 months until all hell broke loose. So this is almost like playing out very similar, but in a different sector, in the energy sector versus the financial sector. So we're going to keep our eye on that, and we're going to be very aware, because what's going to happen is when you're going to have failures, if you have failures in the energy sector, okay, that's going to impact the overall market, because there's a lot of things linked to the energy sector, not just that company itself, but company that issued them debt, they're not going to be able to sustain, and banks that issued debt are going to have to write down the debt, and their prices are going to come down. So it becomes a domino effect. So Now we know why the junk bond index. In fact, there's another index, HYG, which is the high yield corporate bond index, which is just a step above the junk bond. And you can see where this sector has been melting away just the same. Okay, so this is very telling right now. And I'm pretty sure I'm right on this. It just seems very obvious today. And you don't really have to look too deeper. When something seems obvious, it usually is, right? When three guys tell you you're drunk, go sit down. So that's what I see happening in this sector. So let's go over and talk about the last thing tonight, which will be gold, GLD. And you had just an awesome rally in gold today. And most people don't even realize, but overnight, okay, the price of spot gold was down at 1141 and change, maybe 1141.30. Okay, it was down like, it opened at 6 o'clock on Sunday, 6 p.m., and it opened right down like $23 or $25, and it went down from there, and then it began to recover overnight, or early this morning, it began to recover, and then basically we had what you can call a reversal day on pretty good volume. Not great, not huge volume, but pretty good volume. In the GLD, you had 15 million shares. Tremendous volume would have been something like 25 million shares, but it was pretty good nonetheless, way above average. And it's going to be volatile. Gold will be volatile. It's going to back and fill. It's going to come down again. It's going to go up again. But I don't know that we're going to go much lower than this. I think if I had to say on spot gold, I think 1180 was probably a near-term bottom. If we come down below 1200, I think right now we're at 1205 as we trade right now. This is Monday evening. We came down off of the highs today overnight or during this globex session, but that's not unheard of and that's not abnormal. You're going to back and fill, and gold's going to be volatile. But what we said was that we're going to look for 118 in GLD, then we're going to look for the 120 and a half. And we're on our way, okay, because today we hit a high of 117.36. So we're getting pretty close to that 118 neighborhood, 118 and a half, in that neighborhood. So we're going to look for higher prices in gold, and the market looks pretty good. And just the same, GDX, which is the gold mining stocks, which I don't talk about all that often, but that also staged a pretty good rally today. So you can see that momentum is picking up in the gold market, and I think that's, again, as a result of the Japan printing more money and the ECB and the attempt to create inflation in the market. Okay, and that's the perception that's going on, and that's the reason why gold will rally. And I think there's higher prices ahead for gold, but you're going to have backing and filling, and you're going to have days where it's going to look like I'm wrong, but it'll sell off a little bit, but then it'll bounce back, just like it did, sold off hard on Friday, bounced back today. So, and Friday I even told you that we're going to come down, and I said we may even come down to a double bottom, but I'm not worried about it because there's higher prices ahead in gold, and here we were today, higher prices in gold. So I think that's about it. I think that's pretty good for today. We'll see if this sell-off has any follow-through. We're going to need a follow-through day, and then we'll see. And let's go back and just give you the targets once again in the SPY before we leave, because I know I didn't do that before. Had a lot to discuss, and I got sidetracked. So you're looking at a first target of about 201, 202. We'll call it 201 and a half to 202. Okay, that's a first target, and then a second target would be about 198 and a half. And depending on how we get there, we'll see if there's any lower prices ahead. But right now, I don't see much more than that ahead of us. And we'll see how it plays out. But for now, so far, so good. We were correct about the correction maybe beginning today. So we saw that today. We'll see some follow-through, hopefully, and we'll go from there. And by the way, the transports being drubbed today, 249 points, I put out a trade alert to the members, and that immediately it was in the money, and it was one of the railroads, and we almost hit my target for the total return I was looking for in this particular trade. So we put a stop in the money and we'll let it go and see how far down it can go. And what I recommend to the subscribers that are in this trade is trail your stop down. So as the price of that equity moves down, move your buy stop down, your stop loss order down with the market, so that make sure right now we have a winning trade no matter what happens, as long as your stop's in the money. And we just want to keep moving it down so that we make our worst case a bigger gain, right? So that's it for tonight, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.